Good morning and a terrific Tuesday, everyone. Did it sound a bit cheesy? Terrific Tuesday sounds okay, right? Anyway, welcome to today's episode of Morning Well. Three things that we are going to talk about. Tesla's market cap is more than Procter & Gamble. Low trading volumes at NYSE and US IG issuance record. Wall Street closed mixed for the third straight session, and the S&P 500 booked a high since 19th February and came 4 points shy of the all-time record despite prolonged uncertainty in Washington. On Monday, Democrats and Republicans indicated they are at a stalemate over a new stimulus package after Democrats proposed to send more than $900 billion to states and municipalities in one bill, and GOP's counteroffer did not include any additional aid to the states and the local government. Meanwhile, House Speaker Nancy Pelosi said on Sunday that she would call the House back into session to address the funding of the US Postal Service. The Dow Jones lost 0.3%, the S&P 500 was slightly higher by 0.3%, and Nasdaq was up 1%. Manufacturing in New York State expanded in August at a slower pace than projected as more factories reported declining orders. The Empire Gauge's General Business Conditions Index dropped to 3.7 from 17.2. Treasuries advanced. The 10-year yields were down by about 2 basis points. The dollar declined modestly against the G10 basket, with the Aussie pacing gains. Gold strengthened by more than 2%, and Asian equity futures are in the green. In terms of sectors, consumer discretionary, real estate and technology stocks were the best performing sectors in the S&P 500. A point to note was Novavax shares were up about 6.2% after the biotech company said that its experimental COVID-19 vaccine is starting the second phase of testing. Tesla's market cap outpaced consumer giant Procter & Gamble. The automaker stock reached a record, giving it a value of $342 billion, despite reports of a drop in car registrations last month in China, which is a key market. Wedbush is the latest firm to boost its price target, citing strong demand in Europe and China so far in the third quarter, though the US market remains softer. Remember, Procter & Gamble is valued at about $336 billion, so Tesla was up 11% yesterday. Financial and energy stocks, which helped power the S&P 500 rally in the recent weeks, were the worst performing sectors on Monday. Wells Fargo dropped about 3.3% after Warren Buffett's Berkshire Hathaway disclosed on Friday that it was reducing its holdings in the bank. The trading volume in New York Stock Exchange listed stocks rose to 3.52 billion shares on Monday, around one-third lower than the average level that we have seen so far this year. That was slightly up from Friday's 3.24 billion shares, which is the lowest number since New Year's Eve last year. So I think a lot of investors are stepping back and waiting to see how the fiscal drama will play out in Washington before, probably going in for the next leg, either up or down. In news from Europe, the Euro Stock 600 edged up 0.3% as advance in shares of basic resources companies balanced the decline in travel and banking stocks. Shanghai Composite was up 2.3% as the People's Bank of China injected about 700 billion yuan into the banking system via its medium-term lending facility. The move could pave way for lower benchmark lending rates. In Japan, the Nikkei was down by about 0.8% after data showed the Japanese economy endured its worst contraction on record in the second quarter. GDP fell 7.8% in the 3 months through June compared to the previous quarter. This is the biggest decline since at least 1980. Last week it was about junk. We saw high yield issuances reach records. This week it's high grade. US investment grade issuances reached a record 1.346 trillion on Monday, surpassing 2017's full year total in less than 8 months amid seemingly endless investor appetite following Fed's unprecedented steps to bolster their liquidity. There's little sign that the borrowing binge is slowing. Investors have poured over 100 billion into funds that buy high-grade bonds over the last 17 weeks. On the earnings front, JD.com's revenue beat along with adjusted earnings as pent-up demand spurred sales. Mobile daily active users in June increased by 40% and the company said live streaming became more popular. Shares did go up. Earnings that we'll be looking forward to will be Walmart, Home Depot and Kohl's all check in before the US Open. That's the update. Stay safe and healthy, everyone.